According to McKinsey, companies that achieve something called the Rule of 40 are 2 times more valuable than the average performing company. And just as a reminder, Rule of 40 is a combination of year-over-year revenue growth combined with the EBITDA percentage. So, for example, if you're growing at 20% year over year and you're achieving an EBITDA of 20%, you add the 20 to the 20 and you've got 40. So the R factor is 40, or you've achieved Rule of 40. So really achieving Rule of 40 is 3 simple things. 1, finding more demand for your product and service. 2, improving your win rate. The actual combination of win rate and finding demand or increasing the demand, that is opportunity creation. Those are probably the 2 most important variables in something called sales velocity, and you can check out a link to get more information on sales velocity. But yeah, finding more ops, winning more ops. And the third thing is increasing net retention. It doesn't take much, in fact, to improve your results across these 3 important metrics. Let's take an example. Let's say your current performance as a company, you're getting about 10 leads a month and you're converting about 30% of those leads, so roughly 3 each month, are turning into opportunities. So on an annual basis, you're creating 36 opportunities. Let's say your win rate is 25%. So you're winning, effectively 9 deals on, let's say, an average deal size of $30,000 recurring revenue. You're booking about $270,000 a year. Now, simply making an impact on 2 important metrics here. 1, let's say we can increase that monthly lead count from 10 to 15. And let's say because we've so narrowed in our messaging and so narrowed in our value proposition and so narrowed in the segments that we're selling to, we're actually able to convert 40% of the 15 leads. And then that creates double the opportunities on an annual basis of 72. Now, just simply improving our win rate from 25% to 35% will result in bookings of $756,000 in ARR a year. So that is nearly a 3-time impact on sales booking year over year, simply by marginally improving the performance of the organization. And we'll talk to how you can find more opportunities and convert more opportunities and win more opportunities in another video. But it's not beyond anything you're doing today. You factor that on top of the net retention. So let's say we take a company that is at the $5 million mark and their gross retention. So that is companies sticking around. So the attrition rate, 10%, gross retention would be 90%. And they're selling about 15% more back to base. So the combination of the attrition and the back to base growth in ARR would go essentially be 105%. So that is, they're going from 5 million and adding 5% year over year. So that is the equivalent of $250,000 per year for that business. Now, simply improving a couple key metrics there. 1, improving your gross retention from 90% to 93%, which is more in line with industry best practice. And then increasing your back-to-base growth from 15% to 17%. The net retention rate would combine to be 110%. That would double your ARR growth from existing customers each year, from $250,000 to $500,000. Now, when you actually take those 2 numbers, so when you combine the new logo growth, the customer acquisition growth from 250 to 756, and the back-to-base growth of 250 to 500, when you combine that in the organization, and it has a bit of a compounding effect, you're going from a company that's $5 million today to a little over $6 million in 3 years. That $5 million today will grow to $9 million. And you can actually achieve that without actually significantly increasing your sales and marketing spend. So you get a lot of performance gain simply off of the existing investments you have today. Now, hypothetically, let's say that's a $6 million company at a 5x multiple is worth 30 million, right? So in 3 years, you got a $30 million company. Well, when you're at $9 million with Rule of 40, McKinsey is saying that 5 times multiple is actually a 10 times multiple. So you're not at a $30 million company, you're at a $90 million company. So that is the magnitude of impact that achieving Rule of 40 can have on your business. Not only would you be generating more cash in the interim years, but when it is time to exit, your company's going to be worth significantly more because A, it is a bigger company, and B, because it's going to be rewarded with higher multiples.